Welcome back. Now, factory floors were busier in January during the period. All subcomponents of the Absa Purchasing Managers Index improved, with business activity expanding into growth territory with a gain of 5.3 points. Pair this with the strong recovery in new sales orders. Overall, the index increased by 8.2 points to 48.7, just below the 50-point neutral mark. So the sector is not out of the woods just yet. Well, Sello Sekele, economist at Absa CIB, joins us with his assessment of the index and what it suggests about the factory gate moving forward. Sello, great to chat to you once again. Now, the last time we spoke on Business Lunch, that was December. Things were not looking rosy at all. Like I said, we're not out of the woods just yet, but gosh, this is a lovely improvement.
Yeah, it is, and it's quite encouraging. I mean, when you look at the print, what's particularly encouraging to us is that the increase was broad-based. So all five sub-indices that make up the PMI increased, right? Yes, some of them remain below 50, but one is above 50, and that is the one that tracks production. So what it says to us is that production growth accelerated at the start of the year.
Yeah. What's driving this? I mean, we all know December's a quiet month, or even November as well. But what's driving this? Because there's been a marked improvement on the factory floor. Production is up.
Yeah, so what's nice is that the way us economists and statisticians in general look at data is that we isolate seasonal factors, right? So, for example, things like the downtime that you see in December would not affect the data because we account for that. So the data is seasonal adjusted. Therefore, what you see as an increase should be a positive thing to see. So what we see is that normally production follows demand, right? So when you look at new sales orders, which is an index for demand, that has improved. Yes, it's still below 50, but it has improved, especially on the domestic side. On the export side, things maybe are not looking as good, and there we think that is mainly because of the stronger rand.
Yeah. You see, that's interesting because you want to get paid in dollars that are worth more as well, but yet that production is right. What else has the rand sort of had to say here? Because having that weaker dollar has certainly improved goods coming into the country. We're just paying far less.
Yeah, so a weaker dollar or a stronger rand has definitely benefited especially importers, right? So what we've seen is that your purchasing prices went up a bit in January, but they remained at very, very low levels, exactly because of the stronger rand or weaker dollar.
Yeah, oh, it's interesting stuff. Something I always look at when the PMI comes out is jobs. And that's not good news just yet. We're just not getting those jobs in line with increased production. What are you seeing?
Yeah, so for jobs, particularly in the sector, they've still not recovered to pre-pandemic levels. But we are quite optimistic about jobs in general this year, especially if you look at what we think economic growth will be. So today we actually published our new set of numbers. So for this year, we expect economic growth of 1.9%, okay? And that's quite sizable. So with that sort of growth, we should start to see jobs also following in the same direction. So our outlook on jobs is that, we should see some employment gains into this year.
Yeah, perhaps it's also as well, it's got a lot to do with the fact that we are looking at new trading partners now. The United States doesn't want to trade with us. If they do, they want to charge us 30%. Things are getting a lot more sticky and difficult. Perhaps we're just looking around, and maybe this is a good thing. It's pushed us into a new space, which is a good thing.
Yeah, it's a good thing in terms of volumes, right? So if you look, for example, at volumes of vehicle sales that we exporting to the rest of the world, those are up. But what we have to take into account is that when you look for other markets, especially in this sort of environment where you're not the only one that's tariffed. Other people are also looking into other markets. So what tends to happen is that you tend to compete on prices very fiercely. So that might net, yes, be positive because of volumes, but the price might not be in your favor. I don't want to, leave here without saying that the US is an important market for us.
Sure.
So as soon as, our government and the US government find each other, the better for SA.
Yeah. Looking at the business activity index, are we going to be able to keep up this momentum? You said a lovely growth figure of 1.9%, because it would be lovely to get close on 2. That would make news headlines for a very long time. But are we able to keep up this momentum? I'd hate to speak to you in a month or so's time and we're having that December conversation once again.
Yeah, so the hope is momentum is sustained, and I'm saying this especially in the context of where we come from. I think the only direction should be up, especially if you look at the electricity situation. I mean, we haven't had load shedding in a long time, and what's interesting is that Eskom is actually recently surpassing its benchmark of 70% energy availability factor. At the same time, you have a logistics sector that's being reformed, and you see rail volumes also improving. So these sort of things that have been weighing on business confidence, economy-wide and in the manufacturing sector, those should be supportive somewhat to production going forward. What we we are looking at, especially for this year, is the politics, especially local government elections and what's happening in terms of the DA elections around April. So we know that manufacturers are very sensitive to political developments, right? So it will be interesting to see what happens in that front. But I think that up is only where we are going.
Love it. Up and up we go. Sello, thank you so much. Good to chat to you again. We'll chat to you again in a month's time. Looking forward to it. That was Sello Sekele, economist at Absa CIB.